Hey, it's Morgan King from Morgan King Real Estate Group, and I want to share with you today the difference between working with a broker, a mortgage broker, or a bank, thus a mortgage lender. So mortgage lender versus mortgage broker when it comes to buying a house. So there's going to be benefits to each, and so I kind of want to talk about what each one does, and then figure out what's going to be the best option for you. So when it comes to a mortgage broker, they're basically going to be the middleman. So they're working with all the different banks after they've gathered your information and credentials and try and find the best loan option that's going to work for you. The good thing about this is they handle a lot of the paperwork and all the lender interaction. So they work with all the mortgage lenders. You work directly with the mortgage broker. So it's a broker. Now we have the banks. So your Chase, your Wells Fargo, your Bank of America. So you're going directly to the bank to get your loan. The good thing about this is since you're going directly to the bank, decisions can be made pretty quickly. Thus, if you're going through a mortgage broker, they have to then go to the bank to get the decisions made. So you remove that middleman, you're going directly to the bank. So that's one way that it's great to work with the bank. And then the second thing is your relationship there. So if it is the bank that you bank at, let's say you've been there for 10 years, or you have a lot of funds, liquid funds in the bank, you may gain perks by going through them to get your mortgage loan. You're ultimately going to have to figure out what's going to work best for you. And my suggestion is to kind of look through these 4 different things. So compare the mortgage broker to bank based on rates specifically. I would keep it to one type of loan. So just look at a 30-year fixed side by side. What is the down payment requirements? What are any additional credentials that are required? And then most importantly, what is the interest rate? So comparing that side by side is the first step I would do. The second thing is getting closing costs from them. So understanding, including the lender fees for them to do their work. So getting the closing costs from them. Also, if there's prepayment penalty on the loan, that is a really important question to ask. And then finally, look for someone who asks you a lot of questions. If they're not asking you a lot of questions, they're likely just throwing out a general interest rate that they can potentially get you, and it could not even be real. And also know interest rates are a moving target. I mean, they change on the daily, every hour actually. So this will be something you want to continually follow up with to determine which option will be best for you. I hope you found this useful. Please like or share if you did, and we will talk soon.